Good morning. Welcome to Phoenix Trading Strategies uh, training room, where strategic knowledge and information allows you to trade successfully. It is May 29th, 2015. It is 9:05 a.m. Eastern Time. Glad to see new faces and glad to see old faces. For those of you that are new, welcome. For those of you that are back, welcome back. As you know, I've been under the weather for about a month, and it sort of affected my performance because I couldn't trade at all. And I couldn't be with you guys, and for that I do apologize. But now we're fully recovered. We're 99% there, so we're ready to get back into the groove. For those of you that joined us for the European session, it was quite boring, but we still came out with 40 pips. So I was pretty happy about that. And I've got two trades that I placed last night, which I'm going to share with you, and they were the only trades that I placed at all. Which were very positive. So we'll go over those very soon. I want to explain why those were two of the best trades to actually get into. Being that said and done, let's go to the disclaimer before we continue. Disclaimer: future stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the future stocks and forex markets. Don't trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy, sell futures, stocks, or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. Past performance of indicators or methodology are not necessarily indicative of future results. Being that said and done, for those of you that have had a chance to go over our website, our homepage is not a conspiracy theory, but details pretty much and depicts a real part of the inside story of how foreign exchange is being controlled by the major banks. Now, a lot of people don't like to hear that, but reality is that you're playing in their field and they set the rules. Well, if you understand the rules and how they play the game, then you will have less headaches, less expectations, and better results. Bottom line is that we're all looking for better results. We're all looking to succeed, not fail. But you have to have the right tools. You have to have the right information, the right indicators. Many of you have gone, through a lot of unsatisfying experiences with educators out there because they don't have inside information of what happens behind closed doors. That's what we teach you here. But we not only teach you that, we show it to you with our technology and our indicators. We put the theory to the test in the market, on the live edge. And that's what we do to show you that you can win, that you can have success. Granted, there is risk when you take trades, but we show you how to minimize that risk so that you can get the results that you're needing to get and become consistent at it. And from that perspective, we've been very, very careful of the technology that we've created and the education and strategies that we show you. So if you have a chance, take a look at our indicators page. It gives you a pretty detail of what each indicator does. Those of you that have them know that this is me. I know I'm not a pretty sight, but believe me, that big forehead that I have right there, it's got a lot of knowledge, and you want to pick that knowledge every day. The About Us page is pretty much about my journey, and my journey is the same as yours. The reason I say that is because I started trading back in 2001, and I became a licensed commodities forex and forex broker in 2008. I have my Series 3, I have my Series 34 license. I'm currently not registered right now with anyone, but I was exposed to, fortunately, to work with a lot of rising CTAs, money managers, proprietary desk traders, retail traders, our software division. And so I was able to discover a lot of things that the banks were doing that normally you wouldn't be able to see. So this is a great page for you to read. These are my endorsements and specialties. that I have. So sometimes you may not like what I have to say, but you better listen to me because I will change the way that you trade. I will make you better. I will lead you in the right direction, and that's what this is about. It's taken me over 10 years to get to this level, and I'm sharing it with you because as many of you know, I used to work with PFG Best, and I was one of their top performers there. But when the company went under, so did I, and so did my clients. So I'm doing this for my clients to help them get back on top. That's the purpose behind this. So let's take a look at the calendar, and then we'll take a look at the charts. It is Friday. There was a tremendous amount of news that hit last night, primarily hitting the euro. I didn't like the euro that much. I liked the pound, and I'll show you why. Now, we had GDP numbers from Canada today. This morning we had GDP numbers here, and right now we're waiting for Chicago PMI, Producer Manufacturing Index numbers, and consumer sentiment, which should be coming out within the hour. The trades have already taken place. So even though we had, G7 meetings and these numbers come out, they really weren't that impacting, and I'll show you why. Right now, their algorithms are the ones that are running. Now, grant you, last week was very, very bad, and the week before. I'd like to say the past 3 weeks were really, really strange in the market. A lot of lack of liquidity is what I call it, and that was because, you had 5 major banks, Citibank, who else? Barclays, J.P. Morgan, Royal Bank of Scotland, and someone else that got fined $5.8 billion for foreign exchange rate manipulation, which was done years ago. Now, that fine doesn't reflect even 10% of what they made. That was more like a joke, if you ask me, because the amount of billions that they've made over the years is each bank should have gotten fined a minimum of 50 billion minimum, and they didn't do it. So it goes to show you how government regulators don't really know what they're doing because they don't understand the industry. The banks understand what they're doing, and we understand what they're doing. So we just have to know that the game is rigged, and it's okay. It may be rigged, but we're the ones that are changing the game in that perspective because we look for trades that make sense. So let's go to the charts and we'll go from there. So I was looking at this trade last night, and this trade was on the pound dollar. Now you're probably going to tell me, why did I go short on this? That's a good question for you to ask, and I'm going to give you a good answer. Number one, because the previous day before, and this was during the European session when we were trading, we actually, on both sides, we went short, we went long, we closed out. It was about 4 a.m. in the morning. I was tired. I said, ladies and gentlemen, good night. This looks like it's going to go short, but I'm not going to be here to be around for it. And it did. We did predict originally the first trade was going to go short because it was trading below a daily level, which was 153.83. Now, this level is not really a support or resistance level, but a midpoint level. And they usually use these as resistance levels. So they hit this thing about 3 times. 1, 2, 3, 4, and that was it. Normally, they will retest a price level about 4 times, which in actuality is what happened here. They did test it. We took out of this trade each way, I think it was like 10 pips down and then 15 pips up, about 25 pips total. And it was quite boring, quite actually. However, we weren't going for the boring. We were going for the results. I would have preferred, if they would have initiated this trade to the downside during the time that we were in the room, but they didn't. And I don't like to leave, pips on the table. So I usually tell people, you know what? It's done. We didn't get the move, but we got something out of it. So let's part ways and take what is on the table and have a good night. If you stayed for the rest of it, then you got over 80 pips more. So you could have picked up 100 and some pips on this trade. The first 2 trades that we took, and this one coming down. Now the question is, why did I take this trade? Well, here it is. Here on the 15-minute, you see this price level right here where the power dots formed? This is 153.36. Well, this became now the new support and resistance level. So when they broke through this, they came up during the US session and they formed this level. Now granted, when they come at this in a very aggressive manner the way they do, and you see how the candles are trading above the trend dots, they will attempt to break it. But if there is a level up here, and this was the level that we were looking at for them to trade, then they might not. And you also had this one right here. It's a small power dot, just one. Not part of the trend dots, but just one. So you had these two levels right here that pretty much formed the resistance levels that we were looking for. So when they did start to trade around this, you could see how each time they pulled away, they came back, retested, pulled away. When they pull below the trend dots, which these are the trend dots right here, this is a trend stop, but these are the trend dots between the candles. Then at that point, I said, okay, they have to come back one more time and retest, which is exactly what they did. Even though I had power dots here, it didn't matter because this is in the middle of the range. So when you see that happening, the only thing that you have to wait for is the angle in which the trend dots are coming down. And the angle in which they're coming down, you're going to see a tremendous amount of price action being driven to challenge. And when they challenge, they break right through, which is exactly what they did. Now, if I would have seen these power dots form up here at this level, I would have been happier. But I didn't, so it's okay. It didn't really matter. What mattered was that I had already identified this level and this level, which were legitimate support and resistance levels. So even though this one formed here, it was announcing they were going short. But realistically, what they've been doing is that when they're trading within the middle of the range, you have to look for another level that will support your trade. Now, if we were to go to a higher time frame, then on the 30-minute, it was a given. You know, it formed out the gate, and I've said to you many, many times, if you see them form on a 30 or on a 60-minute, a level of power dots, the way they formed here, and this was more of a continuation move, because not only did they break through here, but then they had this level, which is what we were trading the previous night, and I said short, and it did go short, and then this one, they're going from level to level. This level right here, if I'm not mistaken, is a 240. So this is a 4-hour level. So it went from a daily to a 4-hour level, and it was a day-and-a-half trade. Normally, when that happens, you will also find this in higher time frames, and I'll show you why. Let me see. There was, I think it was on the 90-minute. Yep, it was here on the 90-minute. This one formed yesterday, and I saw this. When it formed, I said, you're going short. No question about it. Right below a daily level, and you're forming a power dot on a 90-minute, you're mine. Same thing here. So if you look on the 90-minute, the 120, the 180, inclusively, the 240, if you find power dots that form, you have a trade. And sometimes I'll even go to the 480. So the 480 formed right here. So this was a short trade from the very, very top. So basically from 156.70 to 152.60, we're talking about practically, 400 pips that this thing's gone down this week. 400 pips. So if you're finding these on the higher time frames, then you can drill down and go to the lower time frames, and you will find exactly what you're looking for. But in this case, it was a 30-minute and the 15-minute that gave it away. And that is why I took that trade, because it seemed to be the most logical one. Aside from that, I'm going to show you something else. So we'll put a line right there. We'll go to the 15-minute here. This is a new indicator that we created, and the reason why we created it was also to isolate these price levels. Now, these lines that you see, we were able to basically put 4 different levels: a 15-minute, a 60, a 240, and a 480. Now, I've been playing with it, and originally we were using a 30-minute level, which works very well as well. And you can see this was the one right here, which is this one, 150, 153.45, which is right there. So this level was identified. What this does is that every day at the open of a new day, it forms these new levels. And you can see right here, this is, if I'm not mistaken, a 240 level. Let's see. Yes, a 240, yes. So it's an 8-hour level, but it also reflects on a 240. So you had both levels confirmed here. So what this does is that it confirms not only the gaps where there is no resistance and they have to fill in the gaps, as you can see, down, down, and then finally they came back up to the 60-minute level, to the pip. And what do you have there? Power dots. So you're getting these levels here before the power dots are forming. So when the power dots form, what you have is that you have much more confirmation, which to me signifies sensibility about and minimizing your risk when you're getting into the trade. That's what makes more sense to me. Why is that? Because you're getting so many levels of confirmation that the only thing stopping you from taking a trade is your emotion. That's it, your emotion. But if you follow this, because right now they're running their algorithms 24/7. Now, what does that mean to you? That means that there is no human or manual intervention. Why? Because of the big fine that they just got. So they have to give it up. And so for them to give it up, they're going to run their algorithms. And we've counter-engineered their algorithms. So we're able to see and forecast their trades way in advance before they happen. Look at this. Granted, we were able to see that it started on the 30-minute before the day ended and then continued. And it continued till the very end. I like when the power dots form more than 5 or 10 dots. Why? Because it tells me that the resistance level is strong. And if it's strong in the higher time frame, then they're going to respect it in the lower time frame. Because even though these power dots formed here in the 15-minute and here, the 30-minute and the 30-minute overrides anything the 15-minute is doing, especially when there's no news. So there wasn't any news to really drive this trade higher. It was more of a continuation trade to the downside because they needed to finish going to the next level. For some reason, I'm going to say it in kindest words, these idiots that programmed this have made mistakes. They're human. But because of those human mistakes, we're able to identify the price levels that they are mapping out and are trading off of. So because of that, you're able to get and take advantage of these trades. Now, I got in this trade, but I also got into this other trade. And this one did not do as well. It did come down. I was up about 20 pips, but right now I'm only up 6 pips, and I left it on purpose. Same scenario. Nothing different. What's the difference here? There were no power dots here. It's at an all-time high. But look what they did have. They had here you had previous highs, which were higher, and then you had pivots forming previous lows, and you had them 1, 2, 3, 4, 5, 6. I got in the trade here. So this was after the fourth, it was right before the fourth pivot, but I got into it because I knew that they weren't going to do. Now, I would have preferred if these power dots had formed up here, but instead it formed a congestion level. Again, this is being in the middle of the high of the day and the low. So can't really count on this trade to really give me what I'm looking for. But what I can do is, based on what happened with the pound dollar, I can make an assessment and say this trade looks good. The risk is minimal. The result is not the greatest, but it's directional. And that's what matters. So these for me were the two best trades to take last night. And the results were there. We still had, this was because of the news this morning, and quite honestly, I'm not going to wait for consumer sentiment to come out. So I'm actually going to take this off the table right now. Sometimes it's better to take what you have on the table than to give up more. And granted, it may come down a little further, but it serves no purpose. However, this trade, if anything, signified to you no more from my entry, which was here, to here, about 86 pips. Now that's upsetting. 86 pips. I should have woken up earlier. So I still got 10 pips out of it. I can't complain. But this really wasn't the best trade, but it was a good trade. It was a sensible trade. If you would have been up during the European session, you probably would have taken at least 40 pips out of this trade. But the real trade was this one. This was the real trade because you had confirmation on a higher time frame that they were going down. No question about it. It was already done. Now, this trade, I probably could have gotten 80 pips out of it from my entry because it came all the way down here, 84. So I'm at about 57 right now. And sometimes, like I said, I don't really care to see what more they do. Sometimes it's better just take off what's on the table. So not too bad for two trades. But again, the sensible trade is for you to look for these trades towards the end of the day where they set the levels. This indicator will confirm it. Now, I'm not selling this indicator independently unless you have the original tools and the training that we've given you, because you can't use it. You'll get confused and you'll lose, and then you'll blame me for it, and I'm not going to have that. So in order for you to get this bad boy, you got to get everything else. And you got to go through the training, and you have to demonstrate to me that you have done your homework, because I do make you do your homework. There is no mistake about that. It is a 3-day training course, and we spread it out throughout a week and a half. But at the end of the day, you do learn how to identify the levels. And once you identify the levels, then I show you how to put everything together. And then this tool will make sense, because you'll be able to use this tool the correct way, and you'll be able to yield the results that you're looking for, which is what I'm looking for. I'm looking for your success. I'm looking for you to have success. If you want that success, I can help you. My strategy is very simple, very methodical. It is not complicated. And we're trying to give you the inside information that normally you wouldn't have. Now, the question is, why are the power dots so important? Well, the power dots are important because what they do is that they identify volume and momentum buildup around a specific price level, which allows us to see realistically what they're doing. Now, with our volume indicator, and I have not shown that to you right now, but I will, and I use it quite often, the volume indicator actually will confirm the high frequency trading that the banks are doing, or that their algorithms are doing around specific price levels, to rebalance their order book, to rebalance their risk and get out of trades. Now, one of the things that I've shown you, if you ever see the volume this low and you have power dots forming at a 30, a 60, a 50-minute and are continuous, and you see that they're not breaking that, guess what? They're going to make a move, and it's not going to be in the direction to the upside. It's going to be in the direction to the downside. Now, the volume indicator, your question would be, okay, where would I look to find and confirm this information? You go to the data box. Every power dot here, and in this case, we would look as they get closer to this price level. So we would actually look at it here and then continue to study how they report their volume here. Now here we've been able to synthetically create the volume, which gives you their buying volume and selling volume, but you actually see the emotion behind the decision process of their algorithms. Now here in this specific candle, they bought 86 million and sold 56 million. So there was a difference of 31 million on the buy side. Why didn't they break above 153.45 or 153.46? The reason why is because that extra 31 million were orders that they were bidding above this price level up here. The sellers were not interested in matching those orders, and that's why they didn't fill them. So what happens here is that you're led to an understanding of who's really in control. It's not the buyers, it's the sellers. Because the sellers, if they don't sell, buyers can't buy. So here we're looking at volume from a different perspective. The next candle, 29 million on the buy, 55 million on the sell. Difference of 25 million. The buyers didn't fill that extra 25, but they did give up from attempting to buy at this level and instead pulled back about, I'd like to say 8-10 pips. That was very significant. So then here you can see the volume very simplified, but no movement at all. 38 million on the buy, 40 million on the sell. Next one, 48 million on the buy, 35 million on the sell. They had more volume, but it was a bearish candle. So you're starting to see these anomalies. A bearish candle with bullish volume. Are you serious? And it just doesn't make sense. So then you wait for them to make an attempt one more time, which they did. Right here, 48 million on the buy, 19 million on the sell. A difference of 30 million. And they didn't break above it. That is what gave them away. That they put all their eggs in one basket to try and persuade the sellers to sell to them above this price level, and the sellers said no, and the sellers drove price back down. So you literally had another 2 candles to wait for it. Once you saw this candle form below the trend dots, then that's it. That's when it was over. This was the candle that pretty much told you, look for your entry, which is exactly what I did. But I waited because when I saw these power dots forms, I said, interesting, on a 15-minute, but, you know, we're still having them form on the 30-minute, and this is in the middle of the range, which is between 156.84 and 152.38. So this really didn't matter to me as much as this did, because as soon as this came down from this level and I waited for it, I got in here, but I knew they were going to make one more attempt, and then the pivot pretty much confirmed it, that it was all over, and then it was just downhill from there. I was asleep by that time, but I knew that this trade was going to go down because they had already made 1, 2, 3, 4. After they make 4 attempts, it's pretty much a dead duck. They can't beat that horse any harder, and they literally have to give it up. So here, from this point, you're probably thinking, well, it looks like they're going to break this level and go up. You're right. It does. The minute they break above this level, and they just did right here, 152.71, this is now a buyer's market. Now this is a trade to the upside. Why? Because it broke above this level. They filled the gap, and they have to fill this gap. Now, granted, at 52.79 to 52.94, that's not a lot. It's about 14 pips. And they're really waiting for the news to come out to actually drive this trade. Your risk, even if you got in this trade, would be very minimal. You're talking about 10 pips. That's it. That's your risk. You shouldn't risk any further than that because it doesn't really matter. I'm not that keen on taking this trade because I missed it from here. I would have preferred when they came down and bounced right back up. At this point, it's more of a news trade, so I don't really like news trades in the morning, to be quite honest with you. They're very, very annoying. Now here, for instance, you can also read the volume here. And again, the volume indicator gives you that extra bit of information that just confirms. Look at all the volume they drove into this for the news release. 284 million on this candle on the buying side against 261. Difference of 23 million. This is where all the high frequency trading took place. But they didn't break above 152.93. That's where they held it. Then this one came in, and look how, again, volume was still high. 279 on the buy, 328 on the sell. They pulled away drastically, but they did not pull away enough to come all the way back down. If they would have come back down and settled and closed below what they opened here, I would have said, okay, this is going to come further down, but it didn't. Instead, it held. And the volume is still a lot of high frequency trading around this price level. 223 million on the buy, 169 on the sell, a difference of 54. Why are they not breaking above this price level with all that high frequency trading taking place? And this one, volume just died. So what does that mean? That the buyers pretty much have given up. But not really. They're really just waiting for news, because if they would have stopped, we wouldn't see an increase in volume here in this small candle of 133 million right now against 106. So they're pretty motivated to drive it up, but they're not really driving, full force to challenge this and break this level. This is a reason why I would be hesitant right now to take a long trade and would actually wait for them to come back one more time, because they have not attempted to break above this level right here, 152.94, which is where the 60-minute level is. Then it could mean that once the news come up, they could spike and then come back down. And that's my only reasoning why I would not be involved in this trade. I'd rather just sit on the sidelines and wait. Sometimes it's better. Another reason is that they're way too far from this level, which is 152.37, which is an 8-hour level and a 4-hour level. So they've already hit this thing. It's pretty much done. Now it looks like they're going to try and get back to the middle of the range, and that sometimes doesn't really make a whole lot of sense. Like I said, if we would have been in this trade earlier on, then we probably would have picked up 20-25 pips on this, but we didn't. And the volume is starting. You're starting to see some divergence in the volume bar, so liquidity is starting to go down. And that's another thing, that this indicator does tell you when they increase their liquidity and when they decrease it completely. Just because they decrease their liquidity does not mean that they don't do high frequency trading. That makes a difference. The high frequency trading is what you have to concentrate on around these price levels, because that's where they're rebalancing their trades. And that is why we call this currency portfolio rebalancing, because they're rebalancing their risk in that specific pair. So we look for specific pairs that can give us those results. And that's why the market analyzer is very good, because the market analyzer actually leads us to those trades. If we take a look at the Euro USD right now, I didn't trade this one last night, and didn't really do much per se. This one's been primarily affected by what's going on with Greece and the European Central Bank and their nonsense. But as you can see from the open, it just went long. It didn't really do anything. They did trade above this level though, 109.46. You had power dots here, but look, very, very choppy. I don't like this. And granted, no volume. You could see what they've done. So once they came down here the previous day, they came down to this level, which again was a 8-hour level, a 480. They bounced right from it and went right back to it. So they are trading these levels pretty aggressively, and I say that because we traded this during the European session Thursday morning. You can see our trades. We didn't have any losing trades. On this one, we picked up 10 pips one way, 7 pips the other. But again, they were trading this level and they went right down. We weren't in that trade going down. And this one, they hit it 1, 2, 3, 4, 5, 6, 7, 8 times. 8 times before going down. So they're going from price level to price level. So we are mapping them out correctly. We do have that information that they desperately don't like us to have. You can see here, this is a 480 level on a 15-minute that formed. So it pretty much confirms, what they're doing. Why haven't they broken above this price level, 110? Really no motivation right now. with all the nonsense going on with Greece. I don't think that the banks are really motivated to drive it up any further. They're waiting for a result before they break. But realistically, and look how they've traded right off the 60-minute. So 60-minute levels to 480 or 240 levels are very accurate. These levels are 30-minute and 15-minute levels, and they're not that bad. They usually line up with these price levels, these midpoint levels as well. So it gives you a very good idea of how directional they are. But you're still going off of, the levels that you map out, and those are the ones that matter. Those are the ones that count. This indicator is only to confirm the price levels of that specific day. And how they're going to map out their trade. Once they decide to go in that direction, then you know that they're going to hit it level to level to level to level to level to level to level, which in this case they went from level to level to level to level to level to level. So they went to the upside on this one. Not really a big trade. Quite honestly, I looked at this one, it just did not give me, okay, I wasn't motivated. Let's just leave it at that. I was not really motivated by this trade. The pound dollar and the pound Aussie were better trades to be looking at. So, do we have any questions so far? I don't want to confuse you guys. I want to keep it very simple. Like I said, we're back today, and I want to make sure that you guys get it because we're going to be touching upon new things very shortly in these next coming weeks. And see, look at that. This is based on the news. They're already jumping before the news is even up. Let's see what the pound dollar is doing. For some reason, the pound has become extremely active this past week. Yeah, see, they're challenging that level, which is exactly what we had said here, that they'll try and come up, but if they don't break above 152.94, then they're pretty much dead in the water. Then it comes right back. And the news isn't even out yet. They still have 2 minutes before they release it. But they're filling in the gap. No questions? I'm shocked. Really? Come on, guys. It's a good day. I mean, if you want me to look at a pair, I'm more than happy to look at a pair for you guys. But let's see what this does right now. Once they release the news, I'm curious. And again, look how the candles are trading above the trend dots. This is the reason why I would not be going short right here. Because if this next candle, once this closes, initiates up here, that means they're going to break right through. So let's give it a minute and see what they do. You got a question, Anthony? New Zealand dollar. Okay. That's true. Don't take the risk. All right, let's take a look at the New Zealand dollar. Let's give this a minute real quickly, and then we'll take a look at the New Zealand dollar. There it is. News is out. So what are you going to do? See if it breaks above this level. Let's see what the news was. because it just came out. Let's give it a second. It was bad. Go figure. It was really bad. The numbers were not that great, but we're not basing our decision off of the numbers. We're basing our decision off of how they're reacting against these price levels, how their algorithms are programmed to trade against them. Will they break through, or will they use them as resistance levels and come back? That's what we're looking for. Sometimes trading the news in the US session isn't the greatest idea. I really haven't found it to be useful myself. I have found trading the Asian session to be very good, and I have found trading the European session to be very good. The US session is mixed with a lot of news and nonsense, and the banks and the algorithms don't really know what the news is going to be sometimes, so they try and trade around certain price levels to define their moves. That doesn't really make a whole lot of sense to me, and so I'd rather not put myself at risk, to be quite honest with you. Once in a blue moon, we'll find a good trade. Once in a blue moon, but not quite. So let's take a look at the New Zealand dollar. Let's give it a second. Now remember, this software works on futures, forex, and stocks. Now the New Zealand dollar, this one was interesting actually, but let's take a look in the higher time frames and see if we had anything that would have confirmed a trade to the short. Yep, there it is on the 30-minute. The 30-minute pretty much gives it away. You really got to love when they do that. And you got to look for these trades towards the end of the day. It's not going to take you that long. If you're not working, you really need to pay attention, because these are trades that they pretty much give away. And you're either there or you're not. Now, this one formed towards the end of the day and then continued to form in the new day. But you can see even here, this was 71.95 or 96, which is right here where this level formed. It was the only one. So you can see basically that this trade was legit. If you compare it, it was legit. There was nothing in between, nothing. What's the next level? There was none. Everything else was coming from the top. So this was probably one of the cleanest trades that you could have gotten involved in. Let's see what it looks like on the 10-minute. Yeah, nothing. As soon as this formed here, it was straight just downhill. Really nice, clean trade. If you don't have any support or resistance levels at all forming here from the higher time frames or other time frames, then you know that you've got a clean trade. I like these trades because sometimes you'll have maybe another level down here. Let's see if there's anything down here. Nope, that was it. That was it. There is nothing holding it from going down any further at this point. They haven't defined any new levels. We may see levels on Sunday, but right now we're not seeing anything. So this was a very clean trade to actually be involved in. If you got involved in this trade and you shorted it, you literally picked up 81 pips. Or you could have picked up about 60 to 70 pips, which was a clean trade. Again, these trades present themselves at least twice, maybe 3 times a week. So when they do present themselves, then look for them. Believe me, you won't be disappointed on how they end up. Even if you only get 20, 25 pips, those were 20, 25 pips that you didn't have before. Most of the time during the Asian session, when this happens, I look for 25 to 30 pip trades. Why? Because they're giving it away. So why not take it from them? That's how you should look at trading from that perspective. Like this day, look at this. They pretty much announced it out the gate, and it came down like a storm. So you will have, at least twice a week, these trades that present themselves, which will allow you to take advantage of their necessity to rebalance their order book and bring back balance into, these pairs. So remember, it's like a rubber band effect. You cannot strengthen or weaken a currency for a long period of time. Eventually, you have to bring it back into balance. That's what they do. And when they do that, then you're able to see it. This other indicator that we created does do that, and I'll bring it up to show it to you guys. And this one sometimes will line up very, very well. Not always, but sometimes. Give it a second. This one. Now this one's here is based off of a 15-minute, but it did show one thing, that the New Zealand was already weakened here, but you had dollar strength here, but it didn't quite line up here. This is where you would have looked for the trade, which would have been very late. We're announcing it to you here before the cross. So that means that before the cross, you're still picking up 15, 20 pips. Now the reason why is because by the time that you would have gotten into this trade, which would have been right here, you would have missed 38 pips from that. Granted, it would have been a much more conservative entry, but I don't like to leave money on the table, especially when I know that they're not going to break this price level. That's why we created the power dots and the volume indicator, because the volume indicator would have shown you how they were trading around this level, and every time they came close to it, and that's when it makes sense to look at the volume. When they came close, look at the volume that they injected in this candle. 156 million on the buy, 142 million on the sell, difference of 14 million. Why didn't they break above this level? And then the next candle, of course, their volume drops. But it's not the fact that their volume dropped from the previous candle, it's that they pulled away from that price level. 95 million on the buy, 113 million on the sell. And then the next candle opened below this one, and that was the giveaway because it also opened below the trend dot. Formed a pivot. This is where your entry should have been, conservatively. So you would have missed the first 8 pips, if that. But look at the volume. 146 on the buy, 139 on the sell, but it's a bearish candle. So the bulls never had control of this. They literally just got taken out. And who's in charge? The sellers are from that point. So when you're looking at these, at these trades, our volume indicator does give you the information when they're trading very close to that price level. And these are little tricks that I show you when you go through the training process, how to read the volume and when you should read the volume. But realistically, we're going off of these price levels. These are the ones that make sense to us. These are the ones that sell us the trade. That's it. There's no other way of saying it. These are the ones that sell us the confidence to get in or not out of, or in or out of a trade. This trade was a great trade. This was probably the best trade of the day because there was nothing here. Unlike the pound dollar, you had support levels that had to be broken. But what was the difference with this one? The same difference. You had plenty of open space between these levels, so you knew that they had to fill in the gaps. And you knew on the higher time frame what those price levels were that they were going to be, the range that they were going to be trading within. So that in itself gives you a lot of insight that normally you wouldn't have and that you would miss out on, because it does make a difference. If you know that this is going to be a continuation trade from this that already went down, and it's going to continue to go down, then why would you even attempt to go long? Why? The price level is announcing itself. There is no long trade. This one is telling you there was no long trade. This was to the short, period. So if it's telling you that, and see, that's why I said they're waiting for the news to come up to drive it and break above this price level. If they don't settle above this 152.94 before within the next 5 minutes, then it'll come back down. More likely, though, it looks like they're going to fill the gap and make a run to the upside one more time, or at least to the open. And that doesn't really make a whole lot of sense. Too much risk at this point to be getting involved in that trade. Like I said, if we would have gotten involved here or even on this candle, I would have been a little bit more satisfying to it, because we would have gotten in here right above this level. You know, it would have went from 52.71 to 52.95. That's a pretty good run, pretty good trade for the day. So yes, this was the difference, between that trade and this trade. Now here, we had everything lining up, though we knew what the exit strategy was, which was 152.46, which lined up with this one, 152.37, which basically supported it. So you had the price level they were going to hit, but then you had the price level that they were really going to trade around. This is the one that matters, but this is the one that they were going to hit. So the algorithm has changed here, because now it's announcing to you where they're actually going to exit, and that makes a big, big difference. So for those of you that have the software already, I'm going to be sending you an email inviting you to see if you're interested in the new Phoenix Zones indicator. And if you are, great. What I'm going to do is that I'm doing a 2-hour training on this indicator, because I think it's very important to really understand on how to use it. So I will be in touch from that perspective. Let me see. Okay. Any questions so far? You want me to look at other pairs, or you want to wait for this one to see what happens within the next 3 minutes? Let's wait and see what happens to this one within the next 3 minutes. Let me go down to a 10-minute on this thing. Give me 1 minute. I'll be right back. Just want to get some water. Okay. So they did move. No, look at that. They're stuck right there, right at that level. Let's move this up to match where it's at, about right there. Uh-oh. If they don't break that 16-minute level, they're coming right back down. And they have a pivot right there. And it looks like they're not going to give it up. And it's going to come right back down. See, look at that. And they're going to fill that gap all the way down. And the news is out. So let's take a look at the news real quickly. But you see how with precision it's telling you the price levels of that day that they're going to be trading around? I mean, if you would have gone long from that trade right now, you'd be down 15 pips and kicking yourself. That's why I said it just didn't make a whole lot of sense to me to do so. Let's see if they go down to 152.72, because that's where I'm expecting it to go, which is right here, 152.71, which is right there. But that's a pretty nasty retracement for anyone that went long right before the news. Now let's take a look at what the news was. Must have been really good. Yeah, look, came out really, really positive. Now, the question is, did the banks know this was going to happen? Not really. That's why they go right back to certain price levels that they can basically set up their trade to either go long or short based on the numbers once they're released. That's pretty much it. Now at this point, it looks like they're probably going to go long from this point. But again, I'm not interested at this point. I was more interested on this one. Why am I not interested? I have no power dots here. There is nothing here that tells me go long. I do have one up here that said go short, which it did, and really far from it, but there was nothing here to actually motivate me besides this to tell me that they were going to fill in the gaps and trade within this range. And you can do that. I choose not to. I choose to trade off of the higher time frame levels because it makes more sense to me. It's a much cleaner trade to be going off of. Now from this point you can go long because now it looks like it is going to make that move. Once it closes above this, came down, didn't do anything, but now it looks like it's going to go long. But again, I would have waited for power dots to form. I wouldn't be getting in this trade long. If I would have had power dots form here, I would have been more inclined to be long in this trade, but at this point it just doesn't make sense. Any other pairs that you want me to look at? It's okay, guys, believe me. It's Friday. There is nothing wrong with a Friday. Let's see the Euro USD real quickly. See what it did. See, it went long, and you had power dots here. This one was, this one, if I would have been looking at it, I would have been saying, okay, yeah, and they've traded right above this level. They formed here, so this basically supported this price level to be the new support level, which they used. But again, very choppy. Look at how they traded this thing. Very, very choppy. I would have questioned that, especially with news coming out in the morning. It's sometimes very difficult to do so. Let's take a look and see what the US yen did. Another one that just didn't really do anything. This one, you had a power dot here, it did go long. It came down short based on the news, but now it's going back up. Just very, very, not one of the best trades that I would have been looking for, quite honestly. However, look at what they did. They did at the open of the new day, formed, and they did come down. They did give you a trade. And then during the night, this was the trade to go long. It was very clean. You had two pivots around the power dots. You can't ask for more than that. These are small little details that you have to pay attention to, which they give you. The Australian dollar. Let's see, this one didn't really do anything at all. It pretty much went flat. They did announce it, but they played that game and then they just came down. And they had come down from the previous day, which was really nasty. I mean, this was from level to level. You couldn't miss on this one. And this was based on some sort of news release. But look at this. I mean, from level to level. It just doesn't get any cleaner or clearer than that. It's really interesting how we've been able to define on the higher time frames these levels. This is a 720 level. This was not a this level right here is a 720. So look at that. You know, they announced, granted, there were no power dots, but it was a very strong price level that they were using as support and resistance. And then they went to a 480 level. So from a 720 to a 480, that's a lot of precision. I don't care what anyone says in that regard. No power dots on the 120 or the 180 to continue this trade to the downside, which I would have preferred to find. But you did have some on the 60-minute, which was here, you know, the day before, and here. So if ever you see them, like I said, on the 60-minute or 30-minute at higher time frame levels, which are 720, 480, 240, they're pretty much telling you the direction of the trade. They've set it up. So they've already programmed. So that means that they know the outcome already of what the news is going to say, and they've already planned their trade. Everyone else here that went long was thinking, oh, this is going to go long. Sure, it was, but we show you otherwise because our information is a little bit more accurate, because mathematically taking their volume activity and deciphering how they're trading around these price levels, and that makes a difference. So I think that from that perspective, you'll find that this system is a little bit more precise than others, because it leads you to information that you didn't have before. You remember, you can't really see the volume that they're really moving. We've synthetically created it to show you the emotion behind the decision process of how they're moving these trades. But again, it's one of those things that it's a combination of algorithms that we've created to lead you to this information, so that when you do take a trade, it's based off of logic. The numbers have to make sense. Nothing more, nothing less. You know, I mean, see, look at this one, right? This is the Aussie dollar at 76.72, which is around right here. 76.72, right here. This is a 60-minute. If you would have had this level and knowing that there was a 60-minute level here, would you have even thought of going long? The answer is no. You would have said this is a short trade, which it was. Not a great, not a big trade, because it really wasn't. This was probably on best case scenario 27 pips. But it was a clean trade. And that's why you have to look at it. Now, if you would have seen it here, then this, you know, if you would have seen these levels form right below this level, and this level, then that's a no-brainer. That's a home run. You throw the kitchen sink at them and you don't look twice. Why? Because the trade's going to play out. And they went literally from level to level. These trades do happen every week, guys. Every week they happen. So you have to be, you know, you're either at the right place at the right time, or you're not. My suggestion, you know, set your market analyzer, change it to a 60-minute or a 30-minute. You can have 2 market analyzers up. I do it all the time. And, you know, I just wait and see. You know, I like to trade the Asian session. I love to look for trades around the Asian session. For me, it just makes more sense, because sometimes they'll give you 25, 30 pips, 40 pips without breaking a sweat. And in some cases, you know, they'll give you 80 pips when there's a lot of news coming out. So it's just a matter of understanding what you're doing. So for those of you that are interested in looking at our indicators, you can go to the indicators page, and like it says, take action now. It's really very insightful, and it will get you to where you want to be. Bottom line is that we all want to make good decisions when we trade. We want to make safe decisions when we trade. We want to minimize that risk. And if you understand how they're going to trade, then, and you understand how to define these price levels, because these are not regular support and resistance levels off of candlesticks. Oh, no, 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 no. They have counter-programmed that. Believe me when I tell you, when I show you the difference, it will blow your mind of how they've counter-programmed candlesticks, how they've counter-programmed doji bars, engulfing patterns, you know, W's, flags, you name it, stochastic, MACD. I mean, they have thrown the kitchen sink at you and you didn't even know it. You know, I've came across a few guys that were using Elliott wave and Fibonacci levels, and when they started using them with my software, it was just so much more precise for them that it was just incredible because they could see it. And let's not go too far. I'll show you an example. Fibonacci retracements. If you understood that they were going to trade from here to here, look at how they go through these levels. Much more cleaner. So when you understand the real price levels that they're trading around, you can actually define with other tools that difference. I'm not telling you that this is the end all be all, because it's not, but it comes very, very close. Very, very close. You can incorporate moving averages. You know, I haven't really done it in some times, but you can. I'm not telling you not to. I'm just telling you moving averages are late. Normally, I use a 50, and we change that color to, what's the 50? 50 is this one, the turquoise. And we'll use 1.5. I also like using the 200. And this one is usually white. And I like using the 800 for EMAs. But again, would I make my decision process off of the moving averages? The answer is no. Now, if I know the levels that they're trading off of and I see how they're coming down and it makes sense, then yes, I'm all over that. This trade to me would have been a no-brainer. I mean, the moving average was just coming down. You have power dots, you have this level. It was, you know, this was a given. Would I have made my decision off of that, of the moving averages? No, I would not. You know, and this is a 60-minute. Normally, I trade my entries off of a 15-minute. So would I have done it here? The answer is no. I would not have. That makes a big difference, and you can see how it looks in the pound dollar as well. See here, for instance, our entry was based off of this, which was off of a 200 moving average to some degree, and the minute it broke below, it was on. Would I have made this decision normally on a trade just with the moving averages? My answer to you is no. I would not have. It would not have made sense to me. That's what makes the difference. So, are there any questions? All right, so what I'm going to do is that I'm going to put here in the chat my contact information. I'm going to put my email down. For those of you that have questions, feel free and email me. I don't bite. There is never a wrong question. Far from it. You know, if I can help you, I'm more than willing to. My phone number. My email is ricardo@phoenixtradingstrategies.com. My phone number is 818-431-1357. And my Skype, I'll type it in for you guys if you want to reach out to me at Skype as well. So again, my email, Ricardo, RICARDO, at phoenixtradingstrategies.com. And my phone number, which is 818-431-1357. And try and sign up for the European session, guys. Try and make it. It's the one day out of the week that we actually look to trade on the live edge of the market, and we do it together. I find that a lot of people benefit from it because it helps you to see how the software works in the live edge of the market. No one does that. No one puts themselves out the way we do. We really want to show you that we do have cutting edge technology and have the best intentions of getting you to that next level. Trading is not easy, but it shouldn't be made hard either. If there's a logical step to it, then it will make sense and you will be able to figure it out. And that's what we're here to show you, is how to figure this out. Because this is a business and they treat it as one, and so should you. This is not a game. So if you're going to make the time to learn how to trade this, then allow us to help you. And that's really all that I have for today. So I want to thank you very much for showing up. We will be sending out an email. We will be posting these videos out now. So they should be up by Sunday or hopefully tomorrow. We'll put up the one for the European session and this one for you guys to go back and take a look at, as well as the trades that we took for you guys to, to get an overview. So that's it. Thank you very much for showing up, and I will see you Monday morning. Have a great weekend.